Everybody, good afternoon. Welcome to simplerstocks.com video for tonight. They're going to be for tomorrow. Friday's going to take us into a holiday weekend. Hope everybody has a very nice weekend. Holiday weekend. Of course, the markets are closed Monday. We'll be getting right back at it again on Tuesday. And for this little introduction to Simpler Stocks video, I like to try to find like a trade of the day kind of thing generally. I don't really have anything that I'm real excited about you just running out and hopping right into tomorrow. We'll go through some charts. I'll give you a couple of ideas, but nothing. I'm not real excited about getting into anything terribly much in the way of a new position right now. And you say, well, okay, why maybe? And I'd like to show you. There is a problem. I'm talking with John and also with Tony, Tony's another trader at Simpler Trading, and we've got a concern here with these transports. And John's been doing some videos on this too, on the transports, and the fact that they've really been breaking down lately. You go look at the airlines, for instance, and they've really started to come unglued. In a conversation earlier with Tony today, noting that the 50 period moving average is very, very, very near crossing through the 200, as we all kind of come to call the death cross, I guess, if you will. But let's look at just look at a few and sort of get an idea. Here's United. None of these really look good. There's Alaskan, got Delta. I mean, Southwest, not good. That chart's broken, and it just does not look good. American, very, that's not good. Just making the point that, there's a lot of people, most everybody actually out there right now, who's just very, 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 very bullish because of these new highs that we're putting in the stocks right now, all across the board. I mean, look at this. Here's a chart of the S&Ps, even the S&P futures. You look at the SPYs, SPX, Diamonds, Qs. It's all the same. And I was actually reading something today. I'll see if I can get a copy of it here and kind of read a little bit of this to you and help make a point, and then tell you a short little story. It reads, greed during the last 5 days. Volume in the put options has lagged the volume in the call options by over 40% as investors and traders make bullish bets in their portfolios. Additionally, the volume in the put buying, as seen during the last 2 years, this is at its lowest levels right now. We're at the lowest levels of put buying in the last 2 years. So if you watch the put call ratio and actually keep track of it over time, you can sort of take that information and rate fear and greed on a scale of 1 to 100. And if you do so, right now it's been steadily increasing to a point of, like a year ago in the 30s, a week ago 50-ish, and now I mean, this is literally the lowest level of put buying. I'll make a point here in a minute, I promise. In the last 2 years, we're at like in the 70 percentile. Now, you've heard Warren Buffett say when others are greedy, it's time to be a little worried, and when others are worried, it's time to be a little greedy. Well, right now, everybody's greedy. We're all making bullish bets in our portfolios. We're not buying puts to protect because nobody sees any downside here. Everybody's just focused on when we're going to make 2150 and 2200 in the S&P, and when they're going to see their next highs in their stocks, and it's just bullish, right? Well, when everybody from the clerk at Walmart to the guy driving the taxi cab, and I'll tell you a story about that in a minute, is all about being in the stock market and buying stocks, then nobody sees this down here, this downside. And so, our friend Tony Laporta, who's another trader at Simpler Trading, used to work in London on the Life Exchange. And so, of course, he'd be dressed in a suit and tie when he went to work. And one day he was leaving the exchange, hopped in a cab, and the cabbie says to him, oh, you must be in the banking or the the stocks or something, because he's in a tie. And Tony says, yeah, just left the exchange. And the guy says, well, what do you think about the stocks? All my friends are buying stocks, and I'm buying stocks, and we're all interested in being in the stock market. And Tony says, well, when the butcher, the baker, and the candlestick maker are all in the market, and they're, everybody's bullish, then it's time to be the odd man out and look the other way. So I tell you that story and show you those transports to say that this stock market's not going higher without those transports, okay? And everybody out there right now sees this thing as one direction. Nobody's even talking about any downside, and that's about the time that this thing will reach up and bite you in the behind and remind you the power of the bear that can undo, months and months and months of hard work in just weeks and weeks and weeks of hard work in just a matter of days. And you see it, like when this market corrects, look at how long it takes to build this bid, and then it comes unraveled, that quickly. And and it happened back here. I mean, you climb and fight, and and then it comes undone in a matter of just a very, very short period of time. So what I'm saying is, right now, I'm not real bullish. And I just kind of want to remind you, just let everybody keep in mind that there is another way that, that this market can trade. And a lot of times it does tend to sort of come unravel when it does, and that being on a Friday, obviously tomorrow. And think about this too. Now, I don't know what tomorrow brings. I've been wrong before and I'll be wrong again. But, you know, folks say, well, you know what, let me just sort of take this down and head on into my holiday weekend and not worry about the market until next Tuesday. Start sell, sell, sell. A few sell programs hit the screen, and all of a sudden, we are trading off a little bit. We'll see. We'll see what tomorrow brings. If you want to look at a couple of stocks, I'm not saying rush out and buy these things like just tomorrow, but here's one. In fact, I wouldn't rush out and buy this tomorrow, but here is one. AmerisourceBergen. The story here is these are the guys that carry the pharmaceuticals from the manufacturers to the pharmacies and the hospitals. And so you got to have a means of warehousing and distribution and whatnot. Well, this is one of those distributors. And so where this used to be two companies, Amerisource and Bergen-Brunswig, there's now AmerisourceBergen. There used to be three of these companies, AmerisourceBergen and Cardinal Health. Where there were three, there are now two. And so, obviously you can see they're quite good at what they do. They do work on very, very low margins, I'll tell you, because the pharmaceutical manufacturers are the ones that are really making the serious margins. These guys get to work on a couple of few percent, but the dollars transacted are absolutely astronomical if you think about all of the healthcare products that they're carrying to healthcare facilities, around the country. So that's one. The Novo Nordisk is still working out quite well, actually. We do have one that turned against us and was stopped out today. That's Twitter. If you recall, this was on the idea that we may be able to fish down here for a bottom for a bid back up into 21 and maybe 34 EMAs. The problem was the buys were in the 37.5 against a new low, right? Well, the low at that time was down here at 36.5, 36.52. Today, they traded 36.39, so that's about a loss of $1, and that's stopped out, so that did not work. So if you didn't stop yourself out, you might want to consider looking at getting out tomorrow in the $37 range or so, something like that, because officially that stopped out today for a loss. And that's one thing about it, you don't get everything right, and when you do miss one, it's imperative that you got to own up to it and just get it in the past and and move forward. So okay, I also want to make you aware that on Wednesday, the 27th of May, John Carter is going to be offering a free webinar, and it's entitled The 5-Step Checklist that you can use to find the next hedge fund darlings. If you would like to attend, it is free of charge. It will be on that Wednesday, May the 27th at 8 Eastern, 7 Central. And you can find the sign up page by going to simplerstocks.com/checklist. Okay, simplerstocks.com/checklist. And in that webinar, John will be discussing the topics that you can see here on the screen. How do you find these stocks in today's unpredictable market? And this has been, I have to tell you, a tough market. This has been a choppy market. And it's been that way since literally just prior to Easter, when the European market goes on vacation for those couple of weeks, take their family, for like literally 3 weeks. We lost all that volume. And it's been choppy. It's been unpredictable. So this would be a fantastic webinar to attend. Fundamental criteria: every stock should meet before you buy. Very, very important. Technical analysis tool. I almost named my first child after. I like that. It's pretty cute. Again, if you'd like to attend, it is free of charge. That is on Wednesday, May the 27th at 8 o'clock Eastern in the evening, 7 Central. And you can find that sign-up page where you'll be sent then a link reminding you, etc., by going to simplerstocks.com/checklist. You'll simply need to put your first name and your email in, hit register, and you will be signed up. All right. Hope this helps. You guys have a good trade. Nice evening. Look forward to being with you again at a future update. Good night.